that from Instagram. For stream key, you can go back to Instagram and copy the stream tab. So it's gonna be 1080 by 1994 on the screen. Dedicated graphics card, great control. You wanna make sure it's ready to and then okay. So right now we are ready to go live. Just hit the start live.
Good morning, profitable traders. Welcome to the market color session of today, being the 2nd of February 2026. Happy New Month, and I hope you had a swell time during your weekend. All right, we will be analyzing the markets today, and from my own end, I will be analyzing the XY, GBP USD, and Euro USD. Right after that, I'll have my colleagues analyzing other currency pairs. Right, do well to share the link to everyone on your various social media platforms so this can get to as many people as possible. Without taking further of our time, we'll just head straight to the charts to see what the market has for us this week on the XY. And of course, we always like to start from the monthly time frame. I beg your pardon, weekly time frame rather. Okay. So on the weekly time frame for the XY, I've been looking at this POI for a period of time now, right? The POI at 107.14 to the upside versus the downside. Overall, we want to see price trading right back into this level. Long term, of course, this is what we want to see for price to retrace right back into this level. There are two points of interest, and other block and left shoulder residing at 107.143. Coming down to the daily time frame, let's see what price has for us. Last week, we were actually bearish on the XY value. Pardon, we were looking at price to, sweep the low right here at 97.407 and even sell further. And that was exactly what price did. Price sold even further to the downside. So for this week, I'm still looking out for more sales of the XY, fibbing from point A to point B on the daily time frame. I beg your pardon. We want to see price be tracing all the way to a premium level, either 61.8% fib level or 78.6% fib level. We have point of interest, a fair value gap, and 61.8% fib level on the daily time frame. On the 4-hour time frame, of course, let's see what price has for us on the 4-hour time frame. We've seen price retrace right back into this other block, failed to break above the high and is reacting off that level. We may see price trade all the way to the downside, clearing the low at 95.425 on the 4-hour time frame, and establishing the fact that we still want to sell the XY. Let's see if there be any point of interest as to where we want to sell from on the much lower time frames. It's not so clear on the 15 minutes time frame. I can't see an entry yet. Price was supposed to react at this left shoulder at 96.821, but price is still reacting off that point, right? So we may see price selling all the way to the downside from this level, 96.807. We may see price reacting all the way. Price has traded into it. Price has traded into it and is still stalling. We may see price reacting all the way to the downside from this level. Coming down to Euro USD, let's see what price has for us on the weekly time frame. On the weekly time frame, we're still looking at this point of interest, shoulder at 1.06763, sweep to the downside, break to the upside. Price may retrace right back into this left shoulder, and we'll see price trading all the way to the upside. On the daily time frame, however, right, we've seen price break above the high at 1.18126 after every expansion. After every expansion, we expect a retracement, and fibbing this level, where do we think price will retrace into? I want to see price retracing into 61.800 on the daily time frame, right? So this is where I'm looking at this fair value gap right here for price to retrace into it before continuing the buy to the upside, I beg your pardon. And of course, I am still very bullish on Euro USD, bearish on DXY, and I'm showing you exactly what I am seeing and expecting price to do on the 1 hour time frame. However, there's even a point of interest right here, the classic box pattern that we usually use for analysis during the market color session. Shoulder at 1.1708, sweep to the downside, break to the upside. Once price retraces into this level, I want to buy Euro USD on the 1 hour time frame. Please take note of this price point that we're calling out so that once price trades into that level, we will be right on time to catch the trades. And last on my list being GBP USD on the weekly time frame. Of course, we're still looking at this point of interest long term, right? For the swing traders, we're looking for price to retrace into 1.24683, shoulder sweep, break. Once price retraces, I will be willing to hold the buy of GBP USD on weekly time frame long term. Coming down to the daily time frame, we've seen price trade above the high at 1.35470. Right, expanded to the upside, and of course, we expect some retracement. Always after an expansion, there should be a retracement before price continues in direction of the market. And of course, the overall direction is a buy. I'm bullish, still bullish on GBP USD from last week into this week. And all I want to see price do is for price to briefly retrace into 61.8% fib level on 4 hour time frame also. Pretty much the same thing. Once price retraces into this level, I want to buy GBP USD. And of course, there's another point of interest aside the 61.8% fib level. There's the box pattern on the 4 hour time frame. On the 4 hour time frame, there's box pattern at 1.34197, shoulder sweep, break. Once price retraces into this level, I want to buy GBP USD on the 1 hour time frame also. Pretty much the same price point. Once I see a retracement into this level, I want to buy GBP USD. So my buyers on GBP USD, Euro USD are buys, and that of the XY is a sell rather. So, and of course, I've shown you the point of interest as to where I want to buy from. I'm not just going to enter the market right now. The market is retracing. Once price gets into our point of interest, please do well to take those trades. Right about now, I will be calling my colleague CJ for his analysis on gold and yen right after this very brief interlude. Cheers and God bless.
Good morning, everyone. Welcome to the market color. Once again, my name is CJ. Insightful analysis from Cynthia there on GBP USD and Euro USD. We'll be proceeding as we look at gold against the dollar. Now, starting off with the weekly time frame for gold against the dollar, we've seen how that price has made a very strong push to the downside, having gotten a new all-time high at 5,600. We analyzed that on Friday, so you can go watch the recap on YouTube. Now, from what we are seeing here on gold, gold could be in for a long-term retracement, okay? Bearing this in mind that this weekly order block could cause some push to the upside. This weekly order block right here could engineer some push to the upside for gold. And if it does that, then we'll be looking out for a longer run on gold to the upside before the final sell. So we're having this in mind while preparing for a long-term sell-off on gold. Now, if you look at the daily time frame, I mean, you can see what the power of just 3 candles, Thursday, Friday, and Monday, has done. It has taken out almost 2 weeks, about 2 weeks plus of trading. You can see all these moves to this level. So what we are expecting right now on gold is a possible buy, all right, and then a continuation of the sell, seeing what price has done. One key indicator for us on that sell basis is here. If price should break this low to the downside, then this is the final push that would engineer a very, very long-term sell. I mean, you can see how far gold has bought without a proper retracement. So once you see a move to the downside that breaks this level and closes below it on the daily time frame, then we know we are in for a sell. But as of this morning, you can see what the Asian session has done. We're still selling gold, right? Remember the bias, we're still selling gold until it breaks this level, then we'll continue selling it long term. Now, seeing what the Asian session has done, it has sold so far. I expect the current session, which is the London session, to continue selling. However, before it does so, we expect some pullback so that we can get good entries, which is what price is doing at this time. Now, where am I looking to get an entry from? I'm looking to get a sell entry from right here. Okay, once I see price trade into this level right here, I'll be looking for an entry on gold. Okay, so this is where I'm targeting for a sell entry on gold. This fair value gap and this old low, this is my first bias for the gold buy. So for the gold sell rather. So let's keep watching out for this. Once we see price into this level and selling off, then we'll be taking off ourselves to the downside on gold. So this is the first gold bias that we have this morning. Then the second one, like I mentioned, on the daily time frame, once price breaks this level, then we know we're targeting all the way down to 3,000 or between 4,000 and 3,900. That will be the next target. So for now, while we are selling, we're going to be selling gold into 4,250. That is the first target. Then the next target will be 4,000 or 3,900. So my analysis remains the same. I still have a bearish bias on gold this morning. Now let's quickly hop into the yen basket so that we'll look out for what the yen pairs are giving us this morning. Now, if you see the yen basket, I mentioned last week that the yen basket is getting some breather, looking at what is happening with the dollar index. We're expecting the yen basket to continue its upward momentum, having seen that it has broken this high here on the daily time frame. So there's been a daily time frame break of structure, very confirmed by about 3 candles. Now it has retraced to fill up this volume imbalance, and we're expecting it to continue buying from there. I mean, even if you use the Fibonacci retracement tool right here, you would see that price has retraced into a very decent point of interest, which is somewhere around 50 and 61.8. Now we expect it to just continue buying back to the upside. With this, our concluding bias on the yen basket is a buy. So my bias on the yen basket is a buy. And this is going to invariably mean that my bias on GBP, JPY, and Euro JPY are now sell. So for GBP, JPY, I'm looking out for a sell, seeing that price has come to fill up this volume imbalance as well. If you also measure it using the Fibonacci retracement tool, you see that price is in a decent place for a retracement. It's at equilibrium, having quickly tapped 61.8, is now selling to the downside. So we're looking out for sells on GBP, JPY. So this morning, seeing what the Asian session has also done, that's created a clear break of structure right here. At this moment, we're looking out for a retracement on the 1 hour time frame, and then we continue selling GBP, JPY. So my point of interest for a GBP, JPY sell is right here, this fair value gap on the 1 hour time frame. Once price taps into it, I'll be selling GBP, JPY this morning. So this is what I'm expecting, and I'll ride it all the way to the downside. If you measure all the way from here, you see that this is already 80 pips. So this GBP, JPY is looking very, very juicy for a good sell this morning. And when price gets into this place, on the 15-minute time frame and 5-minute time frame, I'll be looking for an engulfing candle to the downside, which is a bearish engulfing, or a variation pattern to the downside. Then I'll be taking my sell for GBP, JPY. So once price gets here, I'll wait for my entry signature. Once they print out, I'll be taking my sell to the downside. So where are we selling GBP JPY from? We're selling it from 211.988. 211.988. You can mark that out somewhere in your journal. So if price gets there, we're going to be taking our entry. So you can also set quick alerts right there so that you'll be informed when price gets into our point of interest. And then GBP Euro JPY. Now, if you look at Euro JPY on the daily time frame, it's giving us the same vibe we were getting from GBP JPY. We're expecting it to sell off. Okay. Now, if you look at the 4-hour time frame as well, you see that there's been a clear break of structure. Even though price has not traded into our retracement level, which is around 50 or 61.8, but seeing what is happening and how weak the euro is compared to how strong the euro is compared to the pound, whereas we're not expecting it to get all the way up here before selling. So even from around this level, we're good to go for a sell. So looking at Euro JPY, I'm willing to also sell it from the fair value gap, just like Euro GBP JPY, because these have a common point of interest. So once price trades into this level, I'll be selling to the downside. And then finally on the 15 minutes time frame, just like I said on GBP JPY, if I see an entry signature print around here in form of an engulfing or a variation, a bearish variation pattern, I'll be taking my sell to the downside. And my target for these sells would be all these lows, the lows of last week, somewhere around here. Okay, this is going to be my target for this sell. So let's keep in line with what we've said and then keep in touch with our point of interest as well. So if GBP JPY and Euro JPY gets to our point of interest, we're going to be triggering a sell quickly to the downside. So this is my bias on these two pairs. Okay, we're going to go on a very short break for about 10 seconds or 20. When we return, we're going to proceed with the analysis. We still have a lot to go for you today. We have a lot of pairs to analyze for you, and we hope you stay tuned to the end so that you can take advantage of all of them. This is the weekly market color session. Enjoy.
Good morning, everyone, and welcome back to the Market Color brought to you by the Value Flow Trading team. And that has been a very load of insight right from Cynthia to CJ. And this morning, again, we are going to be moving straight into the synthetic analysis because we are mindful of people who also trade the synthetic market. So this morning, we'll be starting the analysis of the synthetic indices with step index. Now, looking at the step index from the daily time frame, are going to observe and agree with me that we already have a market structure shift, even though we've been on a downtrend for some days now. And right now, we already have a very clear market structure shift. And this is giving us a very clean and clear insight into our pulse pattern. As you can see, we have our shoulder and we already have a break after the sweep of liquidity. So what exactly are we now waiting for? Two things. We are waiting for price to retrace into discount level proper, because if you draw your Fibonacci from this low to this high, giving it a swing, then you are going to observe that price has not really tapped properly into the discount. And you don't want to be buying from premium. You just have to wait and see price trade into the discount. And with more confluence, if you draw your Fibonacci from this particular level all the way to this zone, you are going to agree with me that our shoulder level are the confluence with the 61.8% fib level, which is around this zone. So that's going to be a very good level for us to look into the buy of step index. And remember, on Friday, we're looking to short step index somewhere from this top. Let's go to the lower time frame. Now, from the 1 hour time frame, you are going to see that price also has given that sell. So we're looking to short this step index 100 around this zone after price take out this liquidity. And on 15-minute time frame, price came to the exact point and even almost testing where our stop loss level is, because if you look at it, this is the liquidity point that was taken out. But remember, we don't just pull trigger when price just take out liquidity. We wait for entry signature, which is somewhere here, right? And that is the entry that gives birth to all this sell you are seeing on step index. But for this move that we are expecting now for the buy, we are still waiting for price to give us a sell to buy. We are looking more for the last leg of the sell. Now, on this 1 hour time frame, looking at what we have on this 1 hour, I'm of the opinion that when price gets to this particular zone that you're seeing here, this order block here, we should see some level of the sell continuation into the daily reference point. So we are expecting price to get to this zone. Now let's go to the 15-minute time frame to go and watch out for that particular zone on the 15-minute time frame. Now the 15-minute time frame is also giving us a very clear move there, because we already see that price is coming for this liquidity point. So just be patient enough and let price tap into that level proper, and we begin to sell, because we already see the sweep of liquidity and the proper break here. So this is what we are looking forward to see happen on on step index on bread. All right, so let's wait until price get to this zone, then we pull the trigger, and it becomes much more obvious on your 1 hour time frame. This is just for better refinement. So on the 1 hour time frame, just allow price trade properly into this 1 hour order block that you can see here. All right, so that is that for the step index for today, the Monday, the 2nd of February 2026. All right, let's quickly go to the V75-1S. For V75-1S on the daily time frame, you are going to agree with me that we already have price, pushing to the upside gradually because of this liquidity that has been swept, and we have candles closed above that. So now on the 4 hour time frame, if you look at it clearly too, we've seen price, ranging around that zone all the way. But I'm of the opinion that price is still coming to take out all this liquidity. Just as we said on Friday, we've been expecting price to do this because of the weekend, but there's no more volatility. All right, so we expect price to take out this liquidity and tap into this order block, this 4 hour order block. That's what I've been waiting for now, which means that we are going to look for sell opportunity to sell the market all the way down here. Now, if you come to your lower time frame on 15 minutes, but let's first look at 1 hour. 1 hour is also telling us we are still in consolidation, but before a range breaks out, we are going to see your entry on the 15-minute time frame. Now, for the 15-minute time frame, you are going to agree with me that we already see more like a minor structure here, how that price already take out this liquidity, and we've seen proper break to the downside. So we are expecting price to rally all the way back into this zone, and you get that much more clearly on the 5-minute time frame. This is the obvious move on the 5-minute time frame. What we're expecting for V75-1S is a rally all the way into this shoulder level with this reference point. Now, two things: price may just tap into this 15-minute order block, because this zone that you see marked blue is a 15-minute order block, just as you can see here. Price may just tap into it and start selling. That's going to be the first entry, but the premium entry is going to be at the 5-minute time frame, which means if for any reason we see price tap into this zone, then you can load it well, because this also the fair value gap and all that, and also the shoulder level. We just begin to short the 75 somewhere around this point, with our stop loss somewhere at the top here, right? Our stop loss here and our entry either from this zone 1, or you wait for price to get here 2. Okay, so that is the entry, and you are doing your 1:2 or 1:3. But know that this is synthetic, not the currency. I'm not trying to throw jabs this morning, but this is it. Synthetic, it gives you more. So you may just want to follow through to where the structure is, meaning trying to clear all the liquidity below here, which means you are going to trade all the way to the downside. All right, so that is the entry we are seeing on V75-1S and also step index. Just as it said for step index, we are also waiting for price to rally all the way to this zone, this 1 hour order block, and we consider trying to sell from this particular point all the way to the 24-hour, the daily time frame POI, which is inside of this zone. All right, and that is about 1:6. Okay, so that is the outlook for the synthetic this morning step index, and also the 75-1 X. All right, so this is going to be the end for the synthetic analysis. Let's quickly go back into the financial market again to see what is going on the currency, as I call on Demola to tell us what's going on the indices over there. Good morning, Demola.
Good morning to us all. How we doing? Hope we're good, hope we're fine. All right. It's an interesting week already for us on the trading floor. We start with US equities again. We've had a number of analysis being made. Cynthia, CJ, and Lakon, thank you so much for that. All right. Last week, Friday, that was 3 or 4 days ago, right? We had this specific analysis we did on US 30, right, to buy the market because of everything we've been seeing. I believe you can see my screen now, all right? Very interesting stuff. However, we are seeing what is happening in the market now. I'm trying to set up my screen. Okay, beautiful, right? We had the structure of box pattern on US 30 on Friday, looking very good, looking pretty much everything it should give, right? And then we said price is going to start buying up from the other block. And true to it, we saw price, reject off this other block. If you remember, it's a sweep here, right? And then we have an inducement just above the other block, right? And then finally, we have the other block itself on the 2-hour time frame. This is 3 hours, but then the analysis we made was on the 2-hour time frame, right? We had all of this happening, and we said price is going to test into this to continue moving to the upside. We saw that retest happen on Friday. Eventually, price started even pushing to the upside, but then there was no enough strength to continue this bullishness, and that is now making me to also reconsider my position this morning. As we speak, risk is off in a way, especially with the signal of the new, the proposed Fed chairman, the new one that will be coming in. The market is reacting off of that news, right? Although in a way positive, in a way, because we saw the sell-off on gold, right? So now what is happening in this market, we didn't have strength to push all the way to this zone, even to break structure on minor structure, right? So if you look at the 1-hour time frame, we just saw that push a bit, and then price is beginning to move up. There wasn't a break of this zone. There wasn't any break off of this zone, which makes it really suspicious to say will price still continue its movement, because a break off of this zone will be price shifting market direction, and then we are very confident of a buy in this market. However, we didn't see that happen. Instead, what did we see? We see like a retest and then price selling off into the other block again to test this other block that has not been used for a while, this one here, right? So that's where market is, reacting off of. With what I see now, this might be violated, right? This market might be violated, except if we have like good, strong fundamental news on Forex Live and all of that trading platform to give us, just to show us that the market is really, really bullish. Technical analysis wise, market structure, we are still temporarily bearish, right? Major structure is bullish, but minor structure is bearish, and so we want to respect it for what it is, right? So, and also one of the things that might also want to give us like conviction to stay hold for the buy is because of this liquidity that's been gathered across board here, right? We're seeing liquidity, diagonal liquidity, meaning price could as well just bust to the upside and then continue the push
this bullish movement we have going on. But one thing that is going to trigger that is fundamental news. Either Trump comes up to say something really, really nice this morning, or causes some form of chaos, which is not far from what he does, right? And then that begins to send the market to the upside, right? So we could as well anticipate that kind of move. If you're in this trade in this morning and then you're asking yourself, okay, what should I do now? Should I hold or should I stay? One of the things you can do is, since you're not in any red, I believe so, you should not be in any red, even from the last point of entry. You can as well just, size down or even close out all of your position, right? Or if you really, really have signed off the risks involved in the trade before even entry, then you can leave your trade as well, because mine is still on, right? And then we would see how the market is going to behave, right? That being said, on US30, let's move to other pair. Though we really, really need to sit on this, because we believe personally that this should be the driver for the rest this week, right? So if for any reason, if for any reason we see a break to the upside, a bullish move to the upside, that breaks structure. Now, the structure break will be this. It breaks this structure to the upside. Guys, we are set for a buy. Just rest assured, this market is going to fly. If we see anything like this, meaning price struggles, prints more bullish candle, and then we're able to break structure of the previous lower high, then we are good to go in this market. That being said, let's move to the next one. US 100, Nasdaq. Nasdaq on the daily time frame, you can see what we have. Now we've been struggling to break above these zones, right? Like I mentioned, we have this zone here, which price have struggled to a resistance point. Every time price come into this zone, price there's a bounce to the downside, right? It's a bounce to the downside. So we are seeing like a sell-off. However, look at what we have here. Look at what we have here. Beginning to look interesting on the daily time frame. Like there's already kind of a shift from the previous higher high. Price has formed a new higher high, although this new higher high did not break the all-time high, right? So in a way, it's still structurally bearish. It's still structurally bearish. In a way, we can even consider this to be a range, because this has invalidated the entire market structure on the daily time frame. What do I mean by that? This has changed structure, right? So all of this is like a range on the daily time frame. On the daily time frame, it's like a range. This has shifted the last higher low, right? And then we have higher high that has not been broken, right? We have a lower low that has not been tested. So all of this drama in between, this price movement, we can as well consider it a range. But then by the time we go to lower time frame, we want to now begin to categorize on the structure of that time frame. All right. On the 4-hour time frame, what do we have? On the 4-hour time frame, what do we have? What do we have? All right. We have the market given like a box pattern. Like there's also like a box pattern here, which we see the market is currently reacting into, but then all of these areas been mitigated in one form or the other. So coming to 2-hour time frame, let's look for areas that have not been mitigated. In fact, as it stands, all the area in this zone has been mitigated, right? So there's no incentive, from what I'm seeing, there's no incentive for US 100 to keep buying, except there's a fundamental news, right? And there's no incentive for US 100 to keep buying. That's Nasdaq. We should see it continue the sell-off, except there's a fundamental news in the market that triggers the bullish rally, right? That being said, let's come to the 1-hour time frame. Look at what we have on the 1-hour time frame. Still the same thing. This breaker block has been used already by this guy, all right? Price has tested the breaker block and then has given us all the price movement it should give, right? So for this morning, we would want to sit on US 100 without placing any trade on it. Just watch the market and use it as a tool in terms of correlation with the rest of the pair, right? So US 30 and also S&P 500. All right. But if for any reason price would want to respect any buy here, and then this zone will be the area from which we would see it happen. Although I don't see the market doing this, but for any reason at all, that there's a news in the market, everything works together, technical and fundamental, right? So if there's a fundamental news that would trigger this buy to the upside, this is the area of interest. Price will come to start picking orders, right? This other block does not be mitigated, right? So price is going to definitely tap into it and then continue the bullish rally. Like I mentioned, that is really the chances of that happening is very slow. Okay, on S&P 500, let me delete the previous markups. S&P 500, we've seen on the weekly, let's start with weekly. What we have on the weekly, the price action is kind of messy, right? Unlike before, the momentum has really slowed down. Look at how the candles were pushing before, but now we are beginning to see more red candles, right? More sellers beginning to put pressure in the market. So you can see on the daily time frame, what do we have on the daily time frame? Although price has cleared its previous high, we had like a shift here. You had like a shift in this zone, right? And then shift in structure to the downside. And look at what the market is doing. It's beginning to sell on the daily time frame. Come to the 4-hour time frame. What do we have? We have that also still happening on the 4 hours time frame. And so this morning, I would rather want to stick with fundamentals, right? Stick with fundamentals and use technical to just flow along. What do I mean? Technical is telling us everything is bearish. For short-term sell, you can actually take the sales, right? If you're looking at short-term opportunities, you can take the sell. What do I mean by that? Look at another block here. There's another block that's not been tested, respected, or anything, just sitting here. So we can as well take our sales from this zone, but then it's really pretty much not. Let's do 1:2. Yeah, it's 1:2-ish kind of trade we have here, right? There's every possibility price tapping into this and then delivering effectively. But for a long-term trade that you want to hold, that might not be the case. In fact, 2 areas of interest. This setup is early entry. The most preferred will be this one above, right? Will be this one above because price have every incentive to drop. We have inducement. In fact, we have diagonal liquidity. And then price has broken structure to the downside. So we can have this sell-off also. Price selling off from this zone into this. Let me measure it. Okay, cover everything. Yeah, this 1:7. So these are like possibilities for sell this morning, right? But then one thing that can invalidate all of this sell in the market is fundamental news. So we have to stay on the look for fundamental. All right, guys, that will be all for this morning on the US indices market. Thank you for joining. By Wednesday, possible live trade will be given from this market venture there is. All right, thank you. Cheers. The next tutor in the academy will be coming up very soon for our market color. Cheers and God bless, guys. Thank you.
All right, welcome back. These sessions have been so knowledge-filled so far. Okay, so now we're going to be looking at commodity currencies to see the trading opportunities we have for this week and today as well. This week, generally. So let us start off with a look at NZD USD. on the H4 time frame. Starting off with the 4-hour time frame, you can see that price has been breaking structure to the upside. Although I feel the need to always mention this when I use one of our trading strategies here at the floor, which is the all-weather strategy, because I know it is indicator based and not everybody would really know what they're looking at. I just want to indulge you to pay attention to the price points that I'm going to be marking out if you don't have the indicators. And for those of us who are already students of the value flow trading community, then you have the indicators and have them installed on your charts already. Okay, with that being said, NZD/USD has been breaking structure to the upside since November. We see all of our indicators pointing to the upside. Duncham break of structure, all the indicators upside, sunshine printed. This sunshine that was printed here basically indicates that people who were buying all of this move took profit somewhere around here. And when this happens, we typically expect a retracement, a temporary retracement, or a reversal, meaning this buy could just eventually become a sell trend. But looking at this now, price is currently retracing. No sunshine has been printed on the downside, giving me, the idea that there's going to be more downward push of NZD/USD before we now see the buy continuation. So my bias on NZD/USD following the predominant move is what? A buy. Temporal sales are what is expected for you to now sell into our POIs before the buy is continued. And looking at that on H1, I'm going to just point out the levels where these POIs are expected to stop at. POI 1 is now 0.59043 and POI 2 is 0.58245. Yeah. So when this sell starts to happen, I'm expecting it on the higher time frame to eventually trade into this level or into this level. However, looking at the most recent price movement now, I have another POI on the upside, which is 0.60322, and I'm basically expecting NZD/USD on H1 to push a bit higher to this level, hit this level point, and then start to sell. So this is what I'm thinking would happen on NZD/USD on the 1-hour time frame. However, moving down to the 5 minutes, we also have certain POIs that could serve as resistance. You see them pretty much mapped out. These are support levels that could act as future resistance and resistance that would or could still hold. So price has already violated our first possible support level, which could have acted as resistance. It broke it through with so much force, and it is headed towards the next POI. If this level point does not hold and price violates the zone, then we know NZD/USD will give us more buys into 0.60322 before we see that sell that we just spoke on into our 1-hour POI. So all of the points of interest you basically see on the 5-minute time frame are levels that could just serve as resistance. And if price breaks through this, we know it's going to be targeting somewhere around here. But you also want to pay attention to the trend because this is also another POI that happens to hold. 0.60460 can also be a level that holds on NZD/USD before we now see that sell resume. So again, my bias on NZD/USD is a buy, but I'm expecting temporal sells. And if I see confirmation patterns that allows me to take advantage of this sell moves from here to here, I'm going to be doing just that. And those confirmations will typically be on M5 and M1. So when this level shows signs that it's going to be holding, there's going to be break of structures from these levels. The confirmation on the M1 time frame would allow me to take a quick sell from this zone, maybe somewhere around here. Not targeting so much because that is counter trading here. However, if I'm waiting for price to fully align, then I would want to see price trade into this one. But if it doesn't come into this level and the M5 POIs happen to hold, then we could see something like this. It could just be price coming here and then we testing this zone. If this zone is going to hold, we see more confirmation of bias that shows that, and the buy would continue from where it currently is. But I would prefer to have a deeper retracement just so that my stop loss is even tighter. Okay, moving on to the next, which is AUD/USD on the H4 time frame as well. Predominantly, you see it to the upside. If you're a naked chart trader, you're an indicator trader, it is clear. This is fully to the upside. I'm going to zoom out so I see there's any retracement, or rather a resistance level that could stop AUD/USD. Zoom out. This is the most I can see. All right then. So back to recent price movement. Sunshine printed, so this sell was expected. Where is it likely to sell into H1? On the H1 time frame, these are now my POIs. 0.68455 is POI 1 and 0.677290 is my point of interest 2. where price could find support levels on H1 to continue the buy move that we see on H4. Now, similar to what I saw on NZD-USD, there happens to be a level that price could buy into, find resistance before the sell happens. It's very similar. NZD-USD and AUD-USD tend to move similarly a lot of the time. So M5 time frame levels have been marked out. Support level, are you going to turn into resistance? This has already been violated. So my POI now is to see if this zone is going to hold to continue to push AUD-USD down into my H1 buy POI. However, if price happens to break through and gives me confirmation that these M5 levels are going to hold to give us the buy move continuation, then I'll be looking to buy. This has been violated, so we could see a retest from here. Do something like this, give us more break of structures as an insight that this level is going to go, and then we'll be watching out for buys. So my bias on AUD-USD as well is also a buy, and I'm expecting temporal sales of this asset class. And then finally looking at USD CAD on the H4 time frame, predominantly to the downside, Sunshine printed, this buy was expected, a temporal buy to sell. H1 level PY1, 1.37385, and POI2, 1.37756. So there was no Sunshine printed on H4, so it gives me the idea that price could just come to retest these levels and give us even more buys into a good enough zone where we would now continue to sell from. These are now my POIs on the M5 time frame as well. Come back here. Are you going to retest and continue to buy all the way into our next resistance level on H1? Or are you going to validate these levels to the downside and just keep digging deeper? What is going to make me choose a direction when I see even more confirmations? So these are just my general overview or bias on these asset classes. And when I see certain confirmations, then I'll be taking my trade. So let's just quickly look at Forex Factory because I have a couple of high impact news releases as related to commodity currencies. Today we have one on the AUD coming out. Today is what, the 2nd of February. So there's cash rate, RBA monetary policy statement, and RBA rate statement all coming out by 9:30 p.m. So when you see cash rates, just interest rates are charged on overnight loans between financial intermediaries. And this is what has been forecasted to come out 3.85%. If it does come out greater than what was forecasted, then we may see more strength going into the AUD, which will now mean that AUD would have more buying pressure. If it comes out lower than expected, then we'll see, the opposite of the bias, which is to the downside. Same thing for RBA monetary policy statement. More hawkish than expected is good for currency. Hawkish basically means, strict or aggressive. So if this does come out higher than expected as well, we should see more strength going into that. Same, we have NZD-USD tomorrow, employment change quarter on quarter and unemployment rates. We have a couple of high impact news releases coming out. So make sure you pay attention to that because, we are preachers of the market does not just move based on technicals alone, fundamentals play a huge role. Okay, with that being said, this is pretty much what we're going to be looking at this morning. During the week, midweek, maybe tomorrow, Tuesday, Wednesday, or even Thursday, we're going to be sharing live levels, or rather taking live trades together with this community. So make sure you have our Telegram group pinned so that you're able to get all the notifications. We're going to be trading live again this week and, making some money together from this Forex market. And as always, please, spread the word of the market color sessions done by the Value Flow Trading Academy. Tell more people, tell somebody to tell somebody so that we all go together and learn together. Yeah? Okay, so don't forget the live trading session. You do not want to miss it. That is a fact. All right. With that being said, do have an amazing trading week. Cheers to more profitability. Goodbye for now. God bless.